To the Breakfast Club. My name is Darren Hancock, and we are live on December 11th, 2025, looking at the markets. What am I looking for here? I'm looking for a nice little retracement back into here. This would be nice to see this just come auguring all the way back down. All the way back down into here. Like 544. So lose another 100 handles. So we'll see if this 15-minute closes below this candle. We've already had the reversal here, retest, go lower, looking for another one in here, and then continue. See if we break through this market structure, then I'm looking for way back here. Thursday reversal, man. Look at that big reversal overnight. Ba-boom. All the way down here. We got a nice change in direction here. We test back, right back into the reversal and go long. That's the hourly, right? That's all yesterday. Oh, sorry, the 15-minute. And then we peak out back inside the larger range here. Let me make this a little bigger. Inside the larger range we saw yesterday. So I was on Telegram yesterday and I was having a chat with the guys saying, I'd like to see those highs stay intact. We just ran them out. For me, that's still intact highs. And then I said I want to see it retrace. Well, I wasn't expecting it quite to retrace that far. I was just looking for this level here. And it hit it, went through it, range extension. Then a continuation, like holy smokes. And now we've seen this reversal at 2100 hours. Right here. We trade back into it nicely here. You have all three levels you can buy into. Trades back up, takes out the high. We have not had this high retested. This fair value gap gets broken, gets retested. Fair value gap gets broken, retested, goes higher. So where are we in the grand scheme of things? We are looking for, let me just pull up the tool. We're like 62% or something like that, retracement. Yeah, 62% retracement inside the range we created from the drop down last night or from yesterday afternoon. And now we've got this little change in direction right here. Wicks, the body stayed below it. We wicked into it. And now we're taking a run back down here. So I'd like to see if this 62% is just a run back into that level. People want to see those highs taken again, right? This just drives it back down now here. And if we take this level out, these two order blocks here, if we take them out, then I'm looking for this deeper run back into here. And if we can get through this, we're going to go back lower again. And we're going to leave those highs intact. Another run, maybe early in the new year. Or maybe next week. Who knows, right? But anyway, I'm looking for lower prices. How's that? Looking for a run back down here. We'll see how it acts off there. We got 4 people watching. 2 thumbs up already. That's awesome. Appreciate it. I do appreciate it, you guys. All right. So that's the 15-minute chart. Swept to low. See a change in direction. Bull trap. This will be a cam model 3 right here, potentially. So you got cam 1, tap, cam 2, tap, and cam 3 is 50% of that range. It'll put you right back into here. So if we break through that, come all the way back through and tag that, then shoot back up again. That's a cam 3. Good morning, Hans. Equal highs 25.71. Yeah, good equal highs up there. Got lots of arrays to get through to get to that though. I just want to see this hold eat through here, come back, find some support at that, keep pushing lower. Though we said on the 15-minute chart, we could see it run back into, oh, there's a retest there already for this 15-minute. You see how we've already come back into that? Make this a little bigger and get this, remove that so we don't have too much clutter. There's the retest right there. And now I want to see, just continue going lower from here. D says is 610 and 543. 610 543. 610 543. Well, let's take a pull on the range first. The next logical target, which was hit. You got 610. 610 is 70%, 75, 78, 9%. 610. So you're looking at the top of this, a fill of this. What are you looking for? The whole fill of that? That's 15-minute. Let me have a look at what you're looking for on the 5-minute. 610, right? Yeah, that's a fill of this. Consolidation. Return to the consolidation. Got to get through this candle. And then use this candle as support to continue pushing lower. So I'm kind of looking right now to see if this SIBI holds. And we roll over. Or if this bull trap gets taken to the upside. We may trade up into this here. 653. Which is also the mean threshold of that bull trap. And then we'll see. It's got to break through here cleanly if I want to start seeing a run back into a bigger range here. This breaker here is what you're talking about, Hadi. We have a swing point, takes out this high. Gotcha. Just remember your internal range, 50, 62%, so on and so forth. And then if you want it to continue going down, you want to see these levels hold and this. See how we're breaking above it? Well, not breaking above it yet. We just keep tagging through it. We're drilling into this order block, this little overlapping breaker here. So this got to hold if you want to see this keep coming lower. We may get a small retracement back into here. But if it breaks these equal highs here, which is way back up there, all it needs to do is break this buy-side liquidity here, come back, give it a retest on this order block, and then keep going higher. Then we're looking for a run on those highs again. See how we're through this already? Digging into here, keep your eyes on these two levels. Retest this. Continue to push higher. Sorry, let me turn my bot off here. So we got macro beginning now. So this could be a run higher. Just a small retracement back into this range, 50%. I think we already had that. Yeah. It's right off 62% there. See that? Hit right on it. Now we're getting a retracement. We're getting dig deeper into this BISI and see if that BISI there gets broken to the upside. And then that'll be inside this small range here. If that gets broken to the upside, then we're looking for those relative equal highs to get hit. And that'll be that. Still going higher. There's the retest, the reversal. And now we're eating through this level. We're retesting it. Now I want to see if this order block gets hit. So far on a 5-minute chart, you see that we have a reversal here. We have a reversal that continues here. And we went lower, but now we're starting to pull back through it. So if this low has been swept, we've returned back into this order block's mean threshold. And if we break through here on the upside, we're looking for a continuation. So that would coincide with our lower time frame break in market structure if we can get above here and then start attacking these highs again. Yeah, I'd like to see that 6 exactly. Exactly, Hadi. Right on the beezer. Right there. 665.75. Totally agree with you, sir. Now, see how we tap in this? That's a continuation north. We'll see what that's like. I'm just going to put our stop loss 1 tick below that low. There's not a heck of a lot to hunt for in here, except up here. Keep your eyes on the midpoint of this candle. Or you could say, as long as we have a body break above this candle, which we did, we could use this candle's mean threshold. Add the two together. Right there is the midpoint. See if we get some sort of reaction off of here. See how we've taken this high out? We've already got to change the direction right here. So now my stop loss goes here because I don't want to see this get revisited. Because if this is a reversal, then that'll take me out like right there. See how it just came back in and tagged it? So we're back inside this small range here. And we'll see that mean threshold get traded through. So that's kind of like the safety or fail safe. It's like, okay, if I'm on the wrong side of this, it'll come back down and tag me. If it's not, it should clear that high. It didn't. And now we're back into that discount box. That's how to recognize when you're on the wrong side of it. That's all. So now, didn't quite hit our 65 there, D, but institutional order flow. Now we trade through here on a close. Yeah, I get it. Now I'm looking for a retest of this. Ten seconds has to close below. And I want to see range extension. There you go. Stop loss will go up here. And I want to see further down. If it trades back through that level, you got to give it some wiggle room here, I guess. Look at the range from here to here, 50%. I don't want to see it trade through here, but if we're coming back into getting above here, then we're targeting this level again. This is just my range extension, so I just want to get some back here. And we're on the wrong side of it if it gets above 648 on a close. It's waffling. Just hit the 50%. I was trying to get more to go deeper. I ended up buying it and closing out my short. I was trying to sell. I had another one to it. Oh, you need to buy some more of that. It's going to go lower. I just hit buy instead of sell. And I just closed my trade out. Shit rats. I was trying to add another 2 at the 50% range. Now let's just see if it continues on now. Or that was just some serendipitous accident that saved me from this price going higher. That would have pulled me right into this level here somewhere around 50% of this. Watch that take off now, and that's funny. Not enough coffee in the morning. There you go. Now I'm going to wait till 9:30. I expect to see an explosive run down to in 9:30. Then I'm looking for 550-ish. If we can get through 601, 550. So just watch this level here. We'll see if we can we break through it. It was it was a good accident. I did not want to see it close above there, and we are now above it. So that's the run inside this range. So you want to see this get broken for me to go higher. I guess we have to include this. So if that runs all the way up, watch this consequent encroachment here. Zoom in on that a little bit. Mean threshold of this. Okay, while we're waiting for that, let's have a look at some other stuff. Perfect entry in oil back here. Look at that. Traded all the way back up to the premium array over here. Hit it. Created another reversal right here. Traded back into it perfectly right there at 58.93. Go short. Look for the 50%. Start paying yourself here. And here. Trades through it. You go great. Now if it trades back into this candle or this order block SIBI, looking for a range extension. It trades back into the candle there. Goes lower, you get range extension. Now you want to see continuation. You hit this SIBI. We didn't quite get back into, oh yeah, there's a little imbalance right there. You see it? No, we didn't hit it. We did not hit that. And it just rolled over. It's a nice little run from up high. Structure shift retest. Structure shift retest. structure shift right there, retest right there, mean threshold. Bitcoin, what's that up to? Sloppy. You don't even get an institutional order flow entry drill there. Got nothing for you in there. Oh, this is not good for natural gas. Gold. In the middle of the range, a lot of chop. We finally broke this high. We've come back, we've retested it. Looking for this high and a run back into 4-2. I'll put the line up here. Look for around here for gold. This was overnight. We have a retest of our breaker. Go higher. Cattle, cocoa, coffee. Finally broke that high we were looking for. You will see a retest and coffee to keep going higher. Forex. The 1 hour chart on Forex. Nice new price leg higher. Upside objective for euro. Nice. See low swept. It's the big reversal. Body trades above it. Trade back into it. Go long. Takes out the high. Range extension. That's the premium box. So if you go from box to box, now you get range extension. Targeting that objective up here where the carrot, we'd have the carrot sitting. Was that a daily chart we did? That is an upside objective. Oh yeah, that was the one standard deviation, wasn't it? That's the carrot we're looking for. Silver. Silver's got a nice little change in direction here. Takes out the high. Retraces back into this order block. Does take out the mean threshold. So it was sitting on that. Took it out. I'd be waiting for high to get broken. High gets broken. Retest again all the way back down into the mean threshold of that candle. Clears out these highs. Retests the mean threshold again. Pops through it a little bit here. Takes the high. Not super clean. Silver price action. We do have a change in direction right here, closes here, opens up inside it, runs lower, takes out the sell side in this small little range, comes back up, retests the low or the close of that candle, and then goes lower, discount box, trades through it, looking for a range extension. You don't get a candle wick into that to give you an opportunity to get short, to take the low. It runs through and takes the low, creates another reversal. You get the opportunity to get long right here. So there's the reverse after taking lows. Change in direction, reverse, run back into the range. We've got this upside objective here. Took a while to get there, finally gets there. Waffles around a little bit, drops back deeper into this range. What are we targeting here? I guess these last two down close candles, support. Or this over here, the fair value gap. We run through that level, take out the highs. Now we're looking for a fair value gap to form above the highs, and we have a graded response, right? Graded response. A plus leaves A, this retest, and the first 25% tags the old high. 50% is B, so that's 50% of that range. So that's a B level response. C would have been 75%. D would have been a fulfill. So you got a B level entry there for a run higher to the next upside objectives. They're hit. Now you're waiting for this to close above this for another range extension continuation in silver. So now we're looking for a continuation. 664. If we can get a retest of this high here, and no more than the mean threshold of that, that would be a continuation. Morning, Paulette. We'll wait for 9:30. There's the tag. Let's keep an eye on this level right here. So there's your first entry, line in the sand, and you have to take 50% of all of these as well. So you have to kind of keep those in mind. So if this is strong, it should just leave straight from here and continue going higher. And leave this open as a breakaway gap. I'd still love to see a nice dive down. People want to see this go higher, but I'd love to see that just reverse right at 9:30 and start driving right back down. But for now, we've got a change in direction. We've retested it right here. So you're looking for this to go lower, and this, you want to see it hold and go higher. So the battle is between here and this candle right here. For me, that's what it is. And if you take the whole bodies there, 50% is right here. So that's the bottom of this Sibby over here, or Bissy. This freaking bot building here. Southside raid, I said. There's the continuation. Takes the high, pay yourself at the rejection block or high. Move this into break even plus the cost of the trade. So you've paid yourself here. You're at break even. And now we'll see if we continue to run higher. But that's the continuation model. How many actually believed in the continuation model at that point? A lot of you didn't. See how that's an A-level entry? You take that whole fair value gaps, all these little imbalances, you have to add them together. A, B, C is 75%. D is a full fill. There's A level, off a level here. Pay yourself at the next high or rejection block. Move to break even. Now you got these equal lows that are set up. So if it comes back against you, you've got to change in direction. If you're taking a high, you can see the logic here. So if it closes below that or takes out your stop loss that you've moved to break even now, so it would take you out. So at least you made a little chunk of change there. And if it's on the wrong side and comes back through you, that's how you make a quick little buck and protect your money right away. See, it's right through you. So now we're back to this line in the sand again. I used to call this buffering, where you could buffer the, you made a little piece right here. You can put your stop or your entry in along here again. Do the whole trade over again. If it reaches for this premium array, pay yourself at the premium array. If it gets through that, reach for the next objective. Stop loss would be sitting below, one tick below that low. So whatever profit you made there. So watch. So if it tags here, if it goes through that, then look for this target here. Remember this, in order to validate this for a continuation to the upside and see a range extension, we wanted to see this get validated, like stop right here, come back, tag it, then do a range extension, and then a continuation model. And what happened here is that it went straight through it. So are we coming back to just tag it now and then continue going higher? Yeah. Agree, Hadi, 693. Good eye, man. Yeah, I don't trust this now. I'm going to wait for the 930 to take us on a Judas swing. The Judas swing might take us up and then slam it right back down. So we'll just wait and see. So there's the first pay amount right there. If you entered in again long there, pay yourself at that premium. Move your stop loss to break even and wait. Because you don't want to see this keep getting revisited. Drill, 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 drill. You want to see it eat up through here. So there's your premium hit. You want to see it keep driving through here now. Close above 670 and then start running for that 693 that Hadid mentioned. There's the tag of it. Let's see if that holds now, or if it eats through it. Wait for the close. Stop loss would be right here, one tick. Gotcha. Close below that level. So now you're looking for a deeper run into this candle and this sell side imbalance. That's why you quickly pay yourself inside those ranges. So if you pulled your fib tool on that little range we just talked about, if you re-entered that, you got to have the discipline to say, I want to get out. And that's not even a premium from there to there. That's odd. I've always been targeting this, and it wasn't even the premium. The premium would have been like ultimately right there. So lucked out that you would have paid yourself at that level. It's not even the premium. So there's that discount we're looking for right here. Now we're getting a reaction off of it. So we're 2 minutes away from the open. Let's see where the Judas swing starts to take us. Yes, we want to see an express south. One more minute. 30 seconds. Where's it going? Where shall it go, my friends? Where? See this huge drive down. Keeping my eye on the target. Eye on the prize. So I want to see. There. See? Now we're going lower. Shit. Just missed it. That's the continuation right there. Just missed it. Ba-boom. Bye-bye. Did you catch that, Adi? I just missed it right here. As I was pulling the box over, I was like, oh shit, I just missed it. So that's a run. Let her run. Let her buck. How many people are jumping in right now and just chasing that? Just because I put the box down there doesn't mean to say it's going to get there. We want to see if this holds. Yeah, but there's a lot of people chasing that just because we said it was going lower. There she goes. First presentation for value gap. Come on down to 523. Darren's Delicatessen and Discount Emporium. Oh, D wants 538. He's a little more conservative. 538. We got to close below here on a 15-minute. Oh, we're back through here. Retest the breaker. So whips on. If you didn't catch that there, and you're paying yourself along the way here and moving yourself to break even, or you started chasing it because we saw the big bull candle, and those of you who got pulled into the emotion of fear of missing out, if you got in late and now you're getting squeezed, if this reverses, now you get all those doubts creeping through your head, like now you're punishing yourself, like, I shouldn't have done that. You know, what if it doesn't go down lower now? And if it does, then you'll get the dopamine hit that, yeah, I'm glad I got in on that. So all you're going to do is reward shitty behavior. Does that make sense? So if you jumped in on that, you need to type up here the psychology of why I chased this price. And the fact that I felt like I was rewarding myself when it took off. All you're going to do is reward chasing your tail, man. And one day it'll come back and tear your account apart because you had no logical thing. You just ran it based on fear alone. And if you did that, force yourself to get out now, move to the sidelines and let it go and address that whole gut-wrenching feeling that you're feeling, like how much you missed out. Like you really need to learn the psychology of why you're chasing that. And if you are chasing it, then you're gambling. And you got to come to terms with your gambling addiction. I caught it from 927. You went short at 927, Paulette? Ooh, that's ballsy. She said, oh, I think it's going lower. It swept the high, change in direction. 927. She's like, I'm looking at a retest of this little Bissy right here. I'm in for a short. Well, Paulette, good sound logic. I hope you're paying yourself along the way. And then it's a party at Paulette's tonight. Good for you. Good sound logic, though, right? Change in direction. Pretty ballsy right before the open. But hey, if we're expecting a big charge down at the open, which we were, you caught it. Good for you. Hope your stop. Where was your stop loss placed? Just above this high here? The micros. Where was your stop loss placed? Were you above here or just above that fair value gap, saying I don't even want to see it come up there? Looking for our sweet little objective down here. For a box-to-box trade, that's what I'll be looking for. Excellent. Good for you, Paulette. Well done. Look at that, all that liquidity that's been raided down here now. Pay yourself. Brings us right back into that breaker. $684.50. 684.50. That's an interesting stop loss. Okay. So as soon as it breaks these lows, you pay yourself, move your stop loss to break even. Is that how you usually take your trade? Aim for the nearest low, let the rest ride, aim for the next low, the next low, the next low. Or are you a internal range liquidity hunter? Are you a just seeking sell side liquidity way down here? Like, many different ways that you can hunt for your exits. Good for you, Paulette. See this little imbalance right here? See how we came back down, tagged it? Forget this idea now. We're coming back into that range right off here. And yeah, you got to match, you got to draw these out. And I've talked about them in the past, so it's not like I'm form-fitting this. You see it here, you traded all the way back through, it came back into it, and now we're starting to run this high out with a wick at least. So now you want to see if we get above the body here. The first candle to the left that is bull-ish is our bear trap or bull trap. We can get back above that on a close. Now we've already wicked through it once. So if we close above this, disregard this, 50%, I'm going to see that start going higher. .27 and then 1 on the fib. Got it. No body above here yet. Just wait. If we get back below here, then we're back on track for going lower. And then my objective switches to this guy here, which is my box. We're still heading for the box. If we can get through here on a close, we still haven't broken above here. We've got some wicks up there doing some damage. I want to see if we can pop back through here now. Nice. 10 seconds. You want to see it close below that? Nope. First presentation. What's that one? On Wednesday. This is Thursday's first presentation. In 1 minute. How was that? First presentation. Oh, this is Thursday right here, this little line. Seconds. Let's stick it right above this eye here and see what happens. Too much chop. It's too much chop. Nothing clean in there. I'm not going to chase something that we've clearly traded back through this and back through that first presentation as well. So this is an opportunity to get your trade off. That's way too consolidated and crunchy and don't even participate. So I'm going to wait for a cleaner setup. Could be this afternoon. Yesterday I was just killing it in the afternoon. I made some mistakes in the morning trying to chase these consolidated or these crunchy moments like this where you just get crunched up. And then the afternoon it cleaned up, and man, it was smashing some really big trades yesterday. I like this logic. $509. Yeah, I agree. This would be nice to see a 10 o'clock swing down in here and catch a nice macro reversal off of here. I was kind of hoping it would clear up here. We get a nice little clean comeback, tag a nice institutional order flow entry drill. Here's a retest of the old low. So, you know, it feels like it wants to go lower, but who wants to play in that? Congrats, but by the TBH, to be honest, the morning was good for me because this getting back on the horse arrived me to stay with sitting on the hands and just learn. Good for you. Good for you. Yeah, see, now it's rolling over. See, it came back, tagged that open, went through it, came back, tagged it. Still, this is not being worked. Ran through it. It's not even being completely ignored here. Now let's see if it comes back and gives it a little kiss. So consider this. We are way deep into this range right now. If you didn't get on the horse or get on this sucker right here for the short, and this is where you start to, as it comes up into here, you start looking for 1, 2, 3 levels of reversal. And then it went all the way high here, and you go, as long as the body keeps closing below here, and it did, you get the wick coming up into this little guy here. Yeah, this is coming all the way back into here. Change of direction. This would have been a nice little entry here. Come on down. There's your 539 D. Bring me to Papa. Come on to Papa. Bring it home, box to box. $522 to 504. 522 to 504. 522 to 504. Right there. Pop boom. Welcome to box, my friends. One down. There it is. There's consequent encroachment. Well, I was asking for a ripper down, but holy smokes, there we go. Deny, deny. Boom is right, D. But now we're ripping through our level. Now I want to see it come back to our level and look for a range extension model. Right here, I want to see all this get taken, but I don't want to see it get rushed. I don't want to see a bum rush on this right away. I want to see a hold up, come back, give it a tap, then go down. It's saying, hell no, man, I'm going for the run. I'm just going to take out, there's the, that taken. And this has been taken now too. So now we start targeting our, there's 478. That's the bottom of this SIBI again. Done and dusted. 472 is the bottom of that little tiny bissy. That's right there. Okay, so they're all done. Now we're looking for, now we're just scouting out a reversal. Scouting out a reversal. We could still see this run down to 388. And then I want to see 352 to 289. The area of interest. Four-hour chart. That's funny. It's a 4-hour chart for sure. Let's see what we get here. 15 seconds, City. What's our 15-second chart telling us? 15 seconds. There's a little reversal on 15 seconds. Let's wait for this order block to get taken to the upside. There's another little change in direction right here. Do we close below 468? Morning, Vital. Nope. Looks like we're going lower. Come on down. Let's go. Sell short there. I'm doing that. I'm going for the next level down. Move to break even. Let her run. I don't want to see it go above that. Let's just see if it'll just run to our objective. It's out. You got to change the direction here. There's a candle to the left. Don't want to see that get broken. It did. So now it's the sidelines. So for me, market structure has to shift above here. Otherwise, we're just trading back inside this range. There's a retest of that. Right here. Now does it trade back through here? It did. Open. See it keep coming lower now. Pay yourself there. Move the break even. It's a small little payment, but it's probably a couple $100 for you with 2 lots on there. And now we're still looking for further lower. It's a small little change in direction right there. Open, gapped into it like that, and then pay yourself there. Move your stop loss to break even, and I'll let it run. So you got zero stress trade in here, and you've got a little money in your pocket, and you're at zero stress. Now we're looking for a downside objective here. If there is a fair value gap on multiple time frames, which one is more significant? Good question. If there are, now you have to ask yourself, are they overlapping time frames? So you be more specific with your question. If there's multiple, if you have if there are multiple fair value gaps, you use the higher time frames as objectives for lower time frames to reach for. And when they overlap, use the higher time frame as confirmation. So if we have overlapping ones, we've got one that's overlapping here and one that's overlapping with this right here. You see how those two are overlapping? And we want to go lower, then we have to see that this has to hold price right there. And this one, you don't want to see it get traded through on the upside. So I'm using this one as support and this one as resistance. I want to see that one support price to go lower, and I want to see this one resist price, or vice versa. I want to see that one support price to go lower and this one to resist going higher. And that's exactly what you saw there. Good. Then you want to see it trade below this. It does right here. Comes back, taps it right there for the short, and then you continue going shorter there on a 15-minute chart. Does that make sense? So now that when this came back and took you that little entry we just had right here for a short, now you're just looking for this little range. So you got to allow for that to come back into 50% of this small little range. There's 50%. Now you want to see it roll over and go lower. So my stop loss that was here would sit right there. I wouldn't want to see that get any higher than that again. So you want to see this run through the low and just keep pushing lower. So you made a little bit of money below that one, and you've allowed it to retrace back into 50%. Your stop loss is sitting right here, and now you're gonna move it here. Pay yourself again here, or just leave it and let the rest run. That's the trouble with these ones where you got a small little range like this and it starts to trade back. You go, oh, what can I allow it to come back into? Well, you've got this premium box way up here. Do you want to see it trade through your entry? No, you don't. You don't want to see this give way. And it just came back and tagged right on the edge of it here. Took the low, pay yourself again or not, because we have another change in direction here. Nothing significant has popped through here yet, so I'm still looking for this. Run lower. Does that answer your question? When they overlap, then you got to look and say, what's my overall bias? Which one of those overlapping ones do you want to see support price for the bias that you have for a short? If you have on the way up, there's a fair value gap on the 4 hour, 1 hour, 15-minute, and so on. If you could look at silver, what one would you look for first? Okay, let's look at silver. So let's divide silver into, let's look at the 4 hour, just so I'm clear what you're asking me here. So on the way up, silver's made new highs, so there's no let's say here, you got this silver objective here. Like, give me an example of what you're talking about here. If you say you have on the way up, is a 4 hour, 1 hour, 15-minute. So depending on the time frame you want to trade in, are you a long-term trader, a short-term trader? Are you a scalper? All those levels that you're talking about all play important roles in terms of the type of trader you are. So the type of fair value gap you want to aim for is based mostly on your trading style. If you're a sniper and you just want to trade a 15-minute range, the 15-minute fair value gap above you in the range that you're in, that 15-minute range, like this would be a range right here from this low to this high. And if you're shorting this, you want to see this break away, and then you're going to aim for your discount down in here, that your lower box, right? So you want to look for whatever range that you're in. I'm a long-term trader, then go on a daily chart, and you're looking for a daily range, the fair value gaps that appear in the range that you're in the premium portion versus the discount portion, are the fair value gaps you want to focus on. And your entries would be down on a 1 hour or 15-minute chart for a run to that specific discount array if your bias is in that direction. Does that make sense? Or was I too wordy there? So let me give you another example here. So let's look at an hourly chart. So hourly, we don't really have a, if we pull this range from low to this new high here, that would actually be here now. There's nothing in here other than this BISI. And you see how that BISI right there is split by 50% of that range? That would be the premium portion. That would be the discount portion. Because there's no SIBI inside here that's worth hunting for. There's a SIBI right there, but it's overlapping. So you say to yourself, am I bullish overall, which you are? You've retraced back into 50% of this range. You traded through here. You came back, you're inside this. You traded, or you didn't actually get back in that. You just closed below. You did not. Oh yeah, maybe you did. You retested it right there, went to 50%, pay yourself. Change direction when it breaks above here. So this fair value gap is important because you don't want to see it break above it. If it does, then we're looking for higher prices. It breaks above it right here, retraces all the way back into and including this little guy here. So you take from here to here, trades back up, comes back, tags this old high or this order block to the left, and then continues to push higher. So the premium that you have in here is actually split because there's no SIBI below you. So what time frame are you trading in is my question. They all have an important role depending on the type of trader you are. Do you all agree with that? Disagree? So here's a nice example in here. You've got a discount here, and on that higher range you have small little imbalances up here, but you have a premium up above you here. If I go here, premium's above me here. See that? That's the premium box. This is the discount box. If I'm just trading inside this range, I want to go, as soon as the body breaks above the high here, it does. Did we come back and get validation on this? No. We have a candle to the left, which is my bull candle. I look to that one. That's the new market structure shift. Body breaks above it, comes back, gives a little kiss right here. Then I'm aiming for that next premium array up here, and that little tiny imbalance you see right there. And if we can get above that, then I'm looking for a range extension. And we get above it, we come back, we tag it, and then we get range extension. Does that answer your question there, Vital? What time frame do you like to trade on? You sound like you're a long-term trader when you can hold a silver trade for weeks. You're more of a long-term trader, right? Like a swing trader, 1 to 2 weeks. Yeah, if it doesn't give you, if it tests that 50% and get back in, but it never came, it never gave me the opportunity. So here's the 5 minute. We want to see this close above here. We may not get this level right now. We may get it at 11 o'clock. We may get 11 o'clock, run on into here, and then start to see a reversal. We've had a structure shift here, right there. A plus setup. See how we have a fair value gap forming above a high. And then the A plus setup is it just leaves. See, we did not get an institutional order flow entry. So when you're talking about graded responses and you ask, what kind of A plus setup am I looking for? That's A plus, it leaves. But look at the range that you're in here. So once you broke this high, we're aiming for the next upside objective, which is right here, right? So from here to here is my box I'm aiming for. So watch as we close above it. See there? We literally close above it. And I don't want to see it, the range extend just yet until we come back and retest. Retest, range extension. Fair value gap forming. So watch. This is a rinse and repeat, you guys. There's the fair value gap that forms above the high. We want to see an A plus or an A setup. Come back, give it a little kiss. Or at 50%, tag that old high and go. It didn't give you that, so you wait for this to break. It does. You can get in long right there. For your continuation, hits it. Good. Now you're saying, what I want to see is a fair value gap form above here, like we saw here, and do the same thing again. Rinse and repeat. And I'm targeting this high next. So here you go. There's the fair value gap that forms above. We want to see it come back down, tag it, and go higher. A plus setup again. Same thing as here. A plus leaves. A plus leaves. Come back a little bit, but still didn't tag you at your old high or your ABC level entry. Just hit it and kept going higher. Look at this next level here. We want to see the same thing. Oh, look, a fair value gap forms above it right there. And then what do we get? A plus, it leaves. So we've had 3 A plus entries that keep going higher. That's aggressive. That really wants to get moving. Does that make sense? Now you have to decide what your entry is going to be, whether you're an A plus entry and then just you're willing to let it lag all the way down to the D and then a fail, or you're going to go A, B, C, D. You're going to keep layering in your trade because you trust that it's going to go higher. Now if you don't trust it, then you don't trust your setup. You're not happy with that setup. Wait for some or develop your own or find a new way to read price action. So bull trap. You want to see that get broken to the upside? It does. Now I want to see it come back inside the midpoint of it right there. Hits it, goes higher. Validate this candle, find support at it, push higher. Change in direction. If we eat through this guy here again and take that candle out, then I'm looking for, see how we've traded below here, come back in, tag it. If this rolls over here now and starts coming lower, it has to break back up above here, find support, and keep going higher. If not, that's going to roll over and start coming back lower. And remember these levels that didn't get hit? The A plus just left. When we get a retracement starting to happen, like you're seeing here, this return, change in direction. If we start to see it, where does it like to come back and tag? Those areas that it's previously ignored. So watch for this level. It's going back into that SIBI there, I guess. Now watch, see if it gets back above here. We may not get a tag of this again, maybe get super aggressive, and this is going to be the new, if we clear out that high, I'd be looking for this. I'd pull my fib tool from here to here, and I would do this. Target 1, target 2, 3, and 4. See, it cleans that high out on a close. That's the, or you could do one of these if you want, and point your upside objective up here, 661. There's the retest, go higher. It's done its thing here. I don't want to see it come back in here now. Did you understand the logic, the entry? If it comes back and takes me out, then I'll. And you gotta ask yourself. So, what do this? This is what the golden rule. You should never do this. Never move it after the fact. So look at this range here and say, can we come back to 50% of this range? So you got to kind of give it some wiggle room, right? There's 50%. The retest. There's 62% retracement back inside that range. So you don't want to see it go any lower than that now. Now, some of you may be going, you were up $1,000. Now you just threw it all away. You want to keep your logic all the time. Your logic's paying out. So now my stop loss for me needs to go here. I've done my 62% retracement inside here. I don't want to see that go back in there anymore. So now that's the kind of debate you have to have on your, you can allow for all your profits to come back and then hope that it's going to go higher. And that's the kind of decision you have to make on that. See how we broke through that level on the downside? So that's typically an official break in structure and going lower. So now what I want to see is I want to see this bust up here, come back, use take our cam model 1, 2, and then a 3 would be all the way back into this level right here. And my stop loss is going to be 130 bucks. Actually, you can put it right at break even now, plus the cost of the trade. So now it's done its retracement back in there. That's as far back as I want to see it, allow it to go. And it's still 50% of this wick, with this little candle right here. See that? How the bodies are respecting that last up close candle. Now I want to see that. There's take profit 1, so you can take profit there. That's your first level. That's 1 standard deviation. Now the next standard deviation, if you want to go for 2 standard deviations, it's going to be right at the top of this guy here. So the first take profit will be here, and I'll take off 1 there at 2 standard deviations. 682 is my target. Very nice long, nice short, and nice long. So far, so good. Almost done. Thank you, Darren. Have a great day. I'll see you later there, Hadi. Have a good one, buddy. I'm going to move this one into a little more profit. I don't want to see it chopping around in here. And then he's got a target of 682. So the final 682, is it 682 or 782? 682. So he's back up into this premium box again. This 642, this next standard deviation, fills this fair value gap. See that? It fills that. And see how this one here got a chance to get filled. This one didn't, and neither did this one. So coming back into this, we got this breaker. I'm expecting to see some resistance on, which is what we're kind of getting close to right here. So at 591, I expect to see some sort of bounce off of that. And then now that we've taken this high here, I want to move my stop loss like we did before, one tick below that low. I want to see this hold price here now and go higher. Then when I get this high taken, it's a rinse and repeat. I want to see a fair value gap form above here. And then I want to see a graded response. And then my stop loss will move to here. So there's my entry right there. So I want to see this hold price now. And then you want to see that keep going higher. So we've locked in some profit. We move to a risk-free trade now. Let's see, come back and use this level. See, there's your graded, there's a fair value gap that we wanted to see form above, and it did. There's a full D level entry right there. Came all the way back through 1, 2, 3, 4, filled the whole gap. Now aggressively go, so it's just balancing the price to go up higher. It's not leaving anything open for us except down here. So there's the 591. That's the tagging of the breaker on the higher time frame. Stop loss now we'll move into, I want to see this hold price now. So I don't want to see it get any lower than that. So that's where the logic says I don't want to see that break through here. Otherwise that becomes the D level or failure, right? So that becomes my fail safe. So I like to bring myself fail safe up behind my trade because I know when it fails, I should see a specific failure pattern set up, right? So kind of trailing my stop losses. So now what I can do is I can switch to a take profit model 3 and Melody. A take profit model 3 is really waiting for, and a take profit model 3 is really a take, or is a trade model 1. It's the reversal model. Okay, so I've developed this pattern that kind of overlaps itself. One supports the other. So a take profit model 3 would be, if we see this close below here, then close the trade. That long is closed off because now all of a sudden this is a reversal pattern. And am I willing to allow it to come back more than 50% of this range and eat up way more profits? I don't. So you want to see how it's closing. If it, now you're going to watch this candle here. We can get a bit of wick action. So if I take my little swing point here, take profit model 3 is here. I'm using take profit model 4 right now because I'm using a standard deviation model. Remember we called the standard deviation down here. So there's standard deviation 1. You can take your profit from there because I only got 2 lots on. You want to move your stop loss. As soon as it hits the second standard deviation, you move your stop loss to the first one. If it hits the third one, you move it to the second one. So you give it lots of room to grow, right? See how that's still holding price right there? We did not close below it. So when you saw that candle go and you're like, oh, I'm on the wrong side of it. No, wait for it to close. It's the psych candle, right? It's the one that can take you out as it's forming. So now what you say is, I don't want to see that level get broken. It's already come down there. I can move my stop loss to that level, because that means this would be a breaker. Now that we've taken this high out, this becomes a breaker. So I want to see this hold price now and continue pushing higher for my second standard deviation, and I'll take one off there. And that's $3,000 up now. Does this make sense to you guys? Do you see the logic behind each one of the levels I want to find support at, and why, as you guys have been studying this price action with me, candle by candle by candle, you get to see the logic behind why you want to hold that. So I've got 4 different models for take profit here. One is just that internal range liquidity, which we've used lots of times. 2 is the discount to premium box to box trade. 3 is a reversal pattern, which is also a take profit model 3. I'm waiting for the first opportunity to see a downside break, right? A reversal pattern. That'll also be my closing out of my long, because now all of a sudden we've got a setup that says we're going to change direction, right? So, and that's take profit model 3. Take profit model 4 is what we're in right now, which is this scale out a portion at 1, scale out a portion at 2, scale out a portion at 3, 4, so on and so forth. Because I've only got 2 lots on here, I'll scale out at 2. I'm moving my stop loss in here now. I want to kind of back up, so I'm kind of overlapping take profit model 3 with a take profit model take profit model 4 with a take profit model 3. So watch this little level right here. I don't want to see anything more than that. So if it comes back and takes me out, I'm out before my level gets hit. So then what I wait for is, because it's right there, we're already way back there. So watch this. See, it came all the way back. The body's respected that level again. I want to see that keep going higher. I'm in long at 437. Oh, good for you. You're way back here. 437. So where's your logic of that? 437, 437. As soon as it broke this high, you're like, I'm in. Yeah. Ollie's got some amazing, if you guys get an opportunity to join our Telegram channel and have a chat with Ollie, he's got some great logic, man. He catches some beautiful little runs. So he's not using my method, he's using his own method, and it's like right here would be a nice little, that would be the only entry I could see that would be even close to Ollie's entry, and that's 444, and he's at 437. He's down here somewhere. So he's catching a nice little run right off of here. He's got some really amazing logic. So if you guys get an opportunity to chat with him, man. That's a smart British dude you got there. And he's in our box. He's in the house. He's in our house. We got some major British talent here. See how my stop got almost squeezed, but that box right there held price. Went higher. So now I want to see this consolidation get broken through the upside, and then I want to see a CAM Model 1 entry for a continuation and just pay me out my first one there. Then I'll take my stop loss, which is already at the bottom of this. Come on, just give me the payment. I want to let the rest run. I try to understand, and I'm confident I will land over time. Yeah, you'll get it. You'll get it, Melody. So now the risk is, see how we're still just below that 2 standard deviations. I don't want to see this come back into here, but we've got equal lows here and my stop loss is sitting right on them. So now you got to say to yourself, do you want to look for this? You want to risk 50%, which would be just popping below that level and taking you out and then going higher, which would be enough to clear out this liquidity, hit 50% of this range that we're in right now, and then go higher. So we'll watch, see what happens here. If it takes me out, I don't care. But that's what we're going to look for. See if it hits 50%. And then I just look for, yeah, it got me. Okay, so we have a high taken. We have a small little change of direction right here. We traded back into it right there for continuation. Well, if it takes this low out, comes back and tags it right here, I'm expecting this to come lower. So now you can see why the logic is I want to make sure I'm always constantly behind the point in which I can see a reversal happening. So technically I could have moved up to just in here and I say, as soon as I see a body break through this, come back, retest that. I'm on the wrong side of this. It's coming for my stop loss right there. Okay, swept that area. Remember the 50% we were looking for? See if it comes back and hits that level. Is that the one? No, it was right here, wasn't it? Yeah, right here. There's the 50%. See it hit it? Now we come back inside. Now we're looking for range continuation model. We've got range extension. This is range continuation. Boom. And now aren't you happy that we got out when we did? Now you see the logic of it. Now we're coming back deeper into this range. And I didn't get my objective. That's why you kind of overlapping my take profit models. So Melody, when you see that you've got your take profit models, look at those 4 take profit models that I've given you and look at the rules. And then we're kind of using our logic that we do every morning when we're hunting for our each candle, and we're watching each specific order block, each specific candle and how it plays out. We're watching for all that stuff, right? And then you're also looking for your fair value gaps, inversions, and you're looking for places to find support. It's very important that you guys develop a fail-safe. And the fail-safe is that here is, if it fails, breaks to the downside, I'm on the wrong side of it. So if I use that take profit model 3, notice how we didn't break it. We're not breaking it. We're not breaking it till here. Right there, you see that small little one? You break it to the downside, come back into it. Now we're looking for a short. So that's where we could have got our trade out from here. If we're using pure take profit model 3, we would have been out there. Does that make sense? And you have to pick your take profit. I was combining multiple take profit models there, but that model 3 would have been out right there. So you see how market structure has shifted to the downside. We come back in to this candle's mean threshold perfectly. And now we're starting to come back inside this range. So what I want to see now, if I want to get back in sync for another run for this up here, I want to see body break above here, come back, find support inside that little level, or our bull trap has to break the bull trap here. And then I can get back in there. And the difference between getting back in is almost identical to the place I got out. So I didn't have to worry about losing it, all that. If I had my stop loss sitting down here and it fails and it keeps coming lower, then I'm screwed and I give up all that profit. So you can see how that kind of finds a way to protect you. So there's my bull trap. That's what I'm looking for next, to break to the upside. And I'm looking for my rinse and repeat melody. You break the upside, you're looking for a fair value gap. You want to see it come back, tag it. That's the thing we're looking for right here. Break to the upside, graded response. You choose which one you want. And remember, our target's right here. There's little imbalances. So if you really want to be safe, you wait for these to get broken to the upside, come back and use your graded response above here. We're going to go graded above here, graded above here. If we don't get them, we're going to be happy we got out of our trade when we did there. And I can close that guy out now. Does that make sense to you? Do you understand the logic about what I used there? I try to understand 641 is 15-minute partial there. 641, yeah, that's also 2 standard deviations a D. So if I'm looking at this range right here, I'm looking for 50% of that range, and we've hit that. Look at that. Drill, 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 drill. So I want to see this get closed above. You can actually say, I'm going to take that right there, and I'm going to look for my stop loss. It's done down here. I'm looking at this 50% holding price now. 50% of that range. I'm still looking for these equal highs to get taken and that 2 standard deviations to get hit. If it comes back through here, that 50% again, chances are it's going to run for that 62. There's no setup in here. I'm just looking at, I like the way that sat on that 50% and held. We got a little wick down there and then held at 50. That has nothing to do with the trade model. And as you can see, it's going to take some of my profit back for picking a stupid idea that didn't work. There you go. I'm on the wrong side of that. We did not get a trade above here. We did not get a trade above here. I just looked at that and went, oh, that looks good. I think I'll take that. Stupid. That is not a trade model, Melody. So erase that from your memory. The jury will disregard the evidence that was just given. Please and thank you. What is the next rally? DAX, what is next rally? Darren, what are your possible targets on DAX? DAX, where's my DAX? German DAX. There you go. Target hit, my friend. That was the target I had. Your carrot has been munched. That was the upside objective I had for DAX. He goes, yeah, but what's your next one? I want to know what your next one is. Look at that. There's your entry. Ping. Objective. Carrot. Spear your carrot. What I would like to see. Where are we at here? Let's look at a 4-hour chart. This is 1 standard deviation. 2 standard deviations is up here. Oh yeah, that's where my next one is. And then did I have a third? No. My next objective is up here. Right there. Right there. But in order for that to happen, I like to see a fair value gap form in here in the next 4 hours. And then a graded response. See, we've got this high taken. We've got this BISI that has not been hit. So we could get a nice little plummet all the way back down in there and hit this whole area from right here at 0.5. From there, all the way to there is fair game to come back to it and still go bullish. This is kind of like the question that I think it was Vital had asked earlier. What happens when we got 2 overlapping PD arrays? I've got my overlapping BISI and an overlapping SIBI. Right? Which one do I take? How do I know it's going to work? Well, if we're in a bullish trend on a 4-hour chart and I'm looking for this to reach my 2 standard deviations, what do I need to happen? What do I need to manifest? Now that I've taken my profit here, I move to the sidelines and I go, where's my next logical setup? Well, it could come all the way back here. Am I willing to give up all that profit that I just made from that entry on the 1 hour to my first objective? That's up to you. But we know, based on everything we've learned so far about a 15-second chart and a 1-minute chart, that what we could expect here now is a graded response. So we're expecting to see a candle form right here, maybe a down close candle or a wick, and it stops and then creates a 4-grade response inside here. So here's how you're going to reverse engineer this. This is, pay attention. This is not something Michael teaches. It's just something I'm interested in trying to do. So this is my objective, right? I want this to line up with 50% of whatever this is going to end up being. So this may not work out I want you to understand that, but I want you to kind of just look at what I'm trying, the logic I'm trying to create here. I'm trying to see into the future. I'm using my little crystal ball here, and I'm trying to see into the future. And like all good soothsayers, I could be like completely talking out of my ass if I'm wrong. So I'm looking for this. I'm reverse engineering this 50%. So what I'm going to do is I'm going to go from this low to right there. Right there. You see that? A touch higher. Here, right there. Right there. Perfect. So 2, 3. So what I'm going to do is I'm going to do my little thing here. I'm going to go there. And then I'm going to do this. I'm going to clone this, and I'm going to do that. This is a reverse engineering. So what do I expect to happen in the next little while? I expect to see in the next 8 hours, if this stops, I expect to see the next candle come down and stop right there. That'll be the wick. That will create our fair value gap, right? And we know typically 50% tends to line up with this old one here. So to give you a rough estimate where I think this candle is going to stop on the next one down, I expect to see 288.1, somewhere around there. And then the next candle on the next 8 hours, as it closes, as it muffles around inside here, I expect to see the next one come down and go in. This is like 8 hours from now. I expect to see my graded response. I expect to see A set up to here, B set up to right there, bing, hit that. C is 75%, and then D would be the fill. 50% tends to be there. So that's why I've done a reverse engineered where I expect to see the next 4-hour candle. So I'm going to leave this here as a curiosity piece. Not that this is actually how you do it, because it's not. This is just something I've played with to go, can I get some logic here? Because what are we looking for? We're ideally, for this to continue, the A+ setup would be just to take off and leave. As soon as that creates a fair value gap here, just leave, right? We could see this candle come all the way back down, stop just above here. This could all turn into a wick. Then this rolls over and then re-hits that premium box right in here, all the way down to here. That's why I said this area is from here all the way to the high is considered fair game for a retest to go higher, right? So this could be a retest. This fair value gap that we've ignored could be a retest. But we do not want to see that and that get broken to the downside on a close. Otherwise, that was just a run, and then we're looking for another run back down into here. Does that make sense? Did I lose you guys? So for you, Ali, that's the next 8 hours for me on a 4-hour chart. And we'll see what happens and how close I am to my logic. I guess you got these small little imbalances up here. Is there a little imbalance right there? Right. Yeah, it hit it already. So yeah, I'm expecting the next 8 hours to do something in here. And people want me to look at silver now. Silver, high hole silver, and away we go. Look at this. Look at this. Did you see this? This candle. We wanted to see a body break above this candle to the left of the SIBI. You look to the left. You see this guy here. Body breaks above it. Do we come back and tap it? Right there. You tap it, and then off to the races we go. So silver is in another little bullish run. That what you saw there, Melody, on this thing here is more advanced stuff that I'm working on. Doesn't mean to say it's an ICT thing. It's not. He never does this shit. So I'm sure he's got his own method of maybe predicting it, but that's my idea of how I would predict it. based on my logic. Doesn't mean it's right, but don't focus too much on that melody. Stick with the basics right now, because that's more advanced gambling, pretending, hopefulness, looking into the future, rubbing the crystal balls, and see what you get from them. Okay. You're welcome, Ali. So now what are we aiming for on our silver, upside silver objective? If we do 2 standard deviations, we're looking right here. That's my next upside objective for Mr. right there. Pay the trader. And then the next one. And then the next one. And then the next one. It goes from 3 and jumps to 4. These two areas are very sensitive for a reversal. Sometimes you don't get the 3, but you get the 2 and the 2.5, and then it changes up. So do you see what we're talking about here, Melody? What I just did here in German DAX, we're doing the same thing again here. So this one's acting a little quicker because it's a 15-minute. So we'll see if our logic, it doesn't, because we don't have a wick that comes up inside that. So you can't see the 50% tagging an old high here. You see that? So that won't work for us. So now what we're seeing is we're seeing this high taken here and a high taken here. What I want to see now is a graded response here. I want to see this SIBI or this BISI form in here. So I don't want to see this come back and completely fill. If it does, I want to see it come back and retag this candle here or these old highs before going higher. But I want to see this create a BISI, and then I want to see a graded response for another punch higher. And I want to see that act like another breakaway. Right? Now what do they call that? He calls it a breakaway gap and then a measuring gap. So you want to see that act like a measuring gap. Wow. I have to go to the bathroom. Aren't we glad we got out up here? Look at that trash come back and beat us up. You see that? It's good firm logic for me. You see that reversal up here, those two. And just because those are equal highs don't mean to say we're going to reach for them. That's what we were hoping for when I saw this 50%, that maybe we would go there. But you have to see that bull trap get taken. It did not. Bull trap did not get taken. See that? It gets wicked. It's suckering you in. How many times have we got caught in that in the past, right? Oh, it's going to run. Oh, we see take it, right? Yeah, I'm going to go long. And then all of a sudden it rips against you. Crap. Why? What's the rule? I did not trade above the bull trap. Anyway, I'm going to go to the bathroom. I'll be right back. macro has begun. See how we've just traded through here, come back into there, ripped all the way back up into that little area. Remember, I kept telling you that if we don't, this one's been validated, but this one hasn't, right? See how we've come back in to the revalidated one here? And now we're ripping through all of it again. So if we close below here again and come back and use this as support, I want to see that drive price down. So Ollie, I hope you're out of your trade, man, because you're going to get a hell of a squeeze. You're getting squeezed out pretty hard here, right? Body closed above the SIBI. Specific SIBI needs to have a high in it. That will make SIBI high. BISI, SIBI will be breakaway gap, macro, higher time frame, SMT. I can hear your alarm. I always set my alarms. I was going to create an app that put all my trade logic in your app so that you would you get the same alarms that I've got. I've got specific alarms based on my Tibbs model. You want to get more advanced there, Melody? Look at my Tibbs. Look at my Tibbs model. Time in a bottle. Sweet moves today. There's some delicious moves today. Here's our target objective from earlier. Ding, ding, ding. It ain't over till it's over, my friends. It ain't over. Is Hadi gone? Oh, look at you. Are you killing it there, Vital? We're going to Vital's mansion for drinks on Vital. Where do you live, man? We're going to come have a party. We're going to meet up. What part of the world are you in anyway? You don't have to tell me your city. But what part of the world are you in? On my travels, I'd like to meet up one day and say hello. I love meeting up with my my fellow subscribers to the ICT principles. Making decent money. Amazing. Yes. What part of the world are you in, Vital? Are you American, Canadian, German, British? We've got them all in Ecuador. Nice. That's nice to have subscribers from Ecuador. Well, you're making bank now. You can have yourself a nice little Ecuadorian mansion. Vitaly Metlenko. Is that it? Was that your actual name? Vitaly Metlenko. Vitaly Metlenko. I like it. Vitaly Metlenko. You always have to do it with some sort of sultry, deep voice. Hello, my name is Vitaly Metlenko from Ecuador. Well, congratulations, Vitaly. That's awesome. So you've hit standard deviation 2. Now look for standard deviation 2.5, and then be careful. Greed doesn't take you over. Pay yourself at the logical place, and if it continues to go higher, you'll find new entries, man. Don't sweat it. You'll always find new entries. But anyway, that's your choice. Don't listen to my advice, man. Just do your own thing, but keep track of the guy that's trading, that he doesn't turn into this crazy, money-hungry person. Otherwise, you'll end up putting your money at risk, and all you just see is green, and you'll just want to make money, and the beast will take over. Stick with the logic, ones and zeros. If you're a robot and you're trading this, trade it logic only. Do not trade emotionally. And if your heart's racing and you're palpitating right now, get her in check, man. Get her in check. Robots don't have emotions. Boom! Come on down. I want to see that sucker come down. I want to see it come down in here. 4 hours. Look at that. Oh, what's oil up to? What's our oil up to? Look at that, hey? Market structure shift. We come all the way back up to the bottom of the market structure. Go lower. Inside this range now. Did you hit 62%? That's why I love my fib tool. I know Michael says he doesn't, don't count on your fib tool, but I love that sucker. My fib tool is my friend. It's my friend. See, from here, you retrace all the way back up into that. You get short. Pay yourself inside here. Wait for market structure to pop through here. It goes boop. Gives you a little kiss. Comes back. And that's at 50%. 62, pay yourself. 70%, pay yourself. Pay yourself. And then all of a sudden it goes to 78%. Bang on it. And then comes back up and rolls higher. Even in that range, you paid yourself. Discipline though, but discipline, you guys, and you might go, I'm not trading that. But if that was a daily chart, and this is the consolidation we'd be dealing with in a daily chart, those are big numbers, man. We're just on a 5-minute chart. There's their change in direction right there. See that? It's literally opening and closing right on it. Trades back into it. Stop loss will be sitting here. Big squeeze. Ran higher. Pay yourself at rejection blocks. Again, that's the rules. Zero motion. But if that right there, that candle as it's forming is the psych candle. That one's the one that's really working on your, it's going to take my stop loss. And then all of a sudden it goes back. You close out your trade and then it goes in your direction. You get mad because you acted when you saw the candle and not wait for the decision. When I usually teach this, I'll go this when I practice on the weekends. I'll do this, and I'll close my eyes and I'll scroll all the way back, and then I'll start here. So I don't want to see where I'm at. I want to see the range I'm in, and then I want to do one candle at a time. And then you make a decision. Melody, this is a good way to practice. Wait for the candle, like imagine it's like this, and you want to make a decision next. What's my next decision? That candle ends, make a decision. That candle ends, make a decision. Am I still moving in the direction I'm going? Has that candle acted the way I want? Does the wicks do a little bit of damage, but is it still staying where I want it to go? Good. Next candle, make a decision. That candle's over, make a decision. Have I got to change a direction, or am I still going higher? Make a decision. Am I still going higher? That's when you make your decision, not while the candle's forming. Not while the candle's forming. Unless you get more advanced and you start to realize when it really starts to stretch through that level and you see it in the last few seconds of the trade starting to come back and you think that's going to close below it, I get out, wait for myself to get back in for a short. Again, that's more, you'd be watching time. Time's important. That's why TIBS is an important add-on later. It's a nice add-on later. And I'll explain why it's a nice little add-on later in terms of the time in the minutes. As it's going down, you're looking at the seconds chart over here. But anyway, that's more advanced shit. We'll worry about that later. So yeah, make your decision. And I on the weekends I practice, and this is really good because I do it. I tend to build your account on Bitcoin because that's the only one that you can trade 24/7. Make a decision. Make a decision. Make a decision. Does that make sense? So you see how this one's kind of traded through it right here. That's the SIBI. It's literally on it right there. And you go, I don't want to see it break that. And it does. And you go, make a decision now. Now I'm going to say if it comes back into that level and holds, I want it to go short. I'm going to go from here to here. It hits there, go to there, you pay yourself. Done. Now you say, I want to see it break through the top of that or break through the bottom of that. It breaks through the top of it right there. Right there, you see it? Comes back and tags it right here. This retracement is what we talked about over here. I think it was here. Or was it here? Where's that? Silver, maybe? No, where was it? There was one that we said it could come all the way back inside. I think it was 4 hour, wasn't it? Yes. 4 hour. This is that retracement. See how that fair value gap occurs above? This is what we're looking at over on that German DAX right there. This is what we're looking for. This is what I talked to you about. I wanted to see it go create a SIBI, and I want to see it come back into that range. And that from there all the way down into this candle's low or this candle's low, a retest of that is what we're looking for sorry. This candle's low is the retest that we're allowing it to go higher. So that's what you can allow, not only for it to run through here, but to come back and retest this back down here, because that's still that last up close candle cluster or breaker that you want to see fine price and continue going higher. Okay, so you see it right here. It comes back inside, it hits it perfectly on the edge right there. That's precision levels, not just some random, oh, just wick through and caused a little bit of damage. No, it hit right off that data point right there. And it's not form fitting it. I talk about that all the time. Next one is aiming for that data point. Tell me that's not, look. Box to box trading, you guys. Box to box trading. I'm not going to say I'm not going to try and form fit it. I'm going to show you right there to right there. That's the premium box. Watch this. Bang. Tell me that's not a data point the algorithm was reaching for. Not just some random wick that went up there and arbitrarily stopped at some random spot. No, it hit the premium box. Box. Perfect. Right there. If you see that first little reversal opportunity in an imbalance, perfect. And you say, I'm aiming for my next one up. And I'm going to go, where's my premium? Where's my premium? You could say premium's right here. Now I'm going to run from here to here. I hit it. And you go, if it closes above that, the moment it retests this, I'm going long. Watch. Trades above it, comes back, retests it. Perfect. So you're back in again. Long right there. And you're going, oh, look, where's my next objective? Right here. If it gets back through that, I'm catching that for a long, and I'm using this as my bull trap. I break this to the upside. I want to see that get broken to the upside and then come back, find some support at it, and go higher. If it doesn't, if it eats through it, it's through the 50% of that, then I know it's going to target these ones that I've missed. It closed just slightly above it, then ate through the midpoint of it, and came all the way back into right there, the top of that SIBI. Perfect. Perfect. We cut through candles, my friends. Then all of a sudden it runs back above it. Good. Now do we use it as support? Yes, we do. And does it hit the 50%. Look at the 50% right there. Look at where it lines up to right there. I don't know what I can say to convince you, but anyway. Oh, who's these guys? The jerko's calling me here. Stand by. Hello. Who's this? No, you're not. You're one of those scammers. You're a scammer, and I'm not interested. Scammer. You're a scammer, and I'm not interested. You little scammer. Scammy Scammerson. No, you're not from a financial institution at all. I can hear the whole chat group in the background trying to screw over other people in the world. You filthy animal. If you don't get your no good keister out of my house or my apartment, I'm going to fill you full of lead. That's what my wife and I watched. We watched Home Alone. You filthy animal. Anyway, where are we at? That's oil. Let's get back over to our friend over here. Did not reach for this yet. Not broken this to the upside. Wait. Not broken, not broken, not broken. Consolidation. We ran above here. This consolidation is a CAM Model 3. So if I see this break below here, look for CAM Model 3 inside here. So CAM Model 3 is 50% of the leg that runs up. You don't want to see it break 50% of that, roll over and start coming back down. And then I'm targeting the breaker, and I'm targeting in here. %50 of the consolidation. Are you calling me, Lovey? No, I'm not. We won't be done for another half hour. Why? Oh, okay. She's so lovely. There's CAM Model 2 to here. 545. I don't want to see it close above 545. We got models galore. Welcome to our showroom. We've got the latest and the greatest models for your dining and dancing pleasure. %50 of the consolidation right there. CAM Model 2. CAM Model 1 is if we break below 50% or break below this consolidation, come back into the wick all the way up to the leg, the whole wick. So no CAM model yet until we break below here. And we're aiming for here. So my target, it's the bottom of the breaker here, you know, right here. Is there another one above us? Tiny, teeny, tiny one right here. So breaker. Anyway, inside this breaker is consequent encroachment to the next portion down. What I'm looking for. Was born in the good old USSR. Ooh. I was wondering why it sounded like a Russian type name. Yes, I sold 98% yesterday at the end of the day. Nice. Good discipline. Vitali. Vitali. It's not even Vitali. That's more Italian, right? Vitali. Vitali. Picked up this morning on 5 a.m. Good for you. I see this weekend we'll be rewatching the streams again and maybe try this. CAM Model 1 right there. Boop. Boop. Keep coming lower. CAM 1. What did we say 2 was? Somewhere around here. If you violate cam 3 on a close, wrong side. So your stop loss has to sit above here. Yes, my love. It's ready. Well, my friends, what time is it? It's 9:10. I'll take a vote. While I go eat lunch or breakfast, do you guys want me to come back and do some more? Or do you want to close it up today and I'll see you guys tomorrow? Give me a vote. What do you want me to do? If you want, I can leave this open and I will come back and visit you guys again in a few minutes, or we can call her quits. What do you want? If you like what we're doing, give me a thumbs up, subscribe, like, all that kind of stuff. Hit the notification bell. I appreciate it. We're right back into this candle's mean threshold again. See that? Yes, please come back. Okay, I'll be back. Stand by. Well, that was quick. Good morning and welcome. Hello. I'm back, and now we got 7 people in here. Everybody else said, "No, I'm out of here." Thanks for everything. Maybe till later or tomorrow. Where are we? Oh, look at that. Right there. That puts us in there. See that little level we're looking for, the 4-hour? If we're reverse engineering it, it just moved it down just a hair there, and we're still in that 50%. Tagging that old high there. You can see how that reverse engineering so far looks like it's working out. So far so good. Now I need this 4-hour just kind of sit around inside here, and then the next 4 hours to come down into here. So this afternoon, or the Asia session to come down and tag into here would be nice, and then for that to continue expanding tomorrow. But keep in mind, if we lose that 50% and we lose that SIBI here, or this BISI, we're into this BISI SIBI overlap. And then there's another one down here. So we have BISI, SIBI, BISI, BISI. There's lots of imbalances overlapping here. Oh, have we hit my objective yet? We're looking for 1769 for remember I gave you this one earlier today, or was it yesterday? Oh, 2 is right there. See how the bodies are hitting it? 2 standard deviations right there. I don't know why I had it up that high. 2 is right there. So you've hit it, and we're getting a reaction off of that. So that's Vitali. That's the kind of thing you want to be looking for your silver, right? When you get that 2 standard deviations, you may not get 2.5, but Derek, he's a big fan of 2 to 2.5 and pays himself there. And if it goes higher, you can leave a little piece on after 2.5 if it's got some intention, got some legs, or you've got support at the lower time frames for higher prices. Otherwise, great place to exit your lion's share of your trade if you're looking for a 2-banger from this candle's high for continuation. See if this was the similar idea on the British pound, because here was the trade above, that was the active trade in, looking for a 2-banger right there, and here's 2.5, just shy of 2.5, but you got your 2-banger. Nice. And euro is the stronger of the two. British pound is the sister of the market. Obviously, the British or the euro is doing a little stronger at the moment. So There's coffee coming back in to retest this. Nice. Now you want to see coffee leave from here. You do not want to see it start going through here. If it eats through the mean threshold, look for a fill of this SIBI. And if it takes off on the wrong side of that, then we're revisiting down here. And we're on the wrong side. It's not going higher. This is what we're looking for in wheat. Wheat did a nice little reversal here, closed above, coming back in. There's the mean threshold. You want to see that hold price? Leave this open, act as a breakaway gap. I want to see us start running for this next objective. I'd be looking up here for wheat. If you've got a commodities trader and you're interested in wheat as an upside objective, I'm looking around 536.73-ish. See you later, babe. Drive careful. Love you. Wait. She thought she was going to get away without a smooch. I need a little smooch. Probably got like pink lipstick on now. Good stuff I'm seeing on a 5-minute time frame. Holding the ground for continuation for silver, you mean? For 5 minutes? Let's have a look at that. So far, yes. You don't want to see this little market structure shift here. Otherwise, think about 50% of this range. Vitali. So if you lose this, look for a run back into 50%. 62% puts you right on top of that order block again. That breaker there. 70%, 75%, 79% puts us back inside here. So watch here. So far you're still bullish, still good. This would be nice to just see it waffle around here for a little bit. And then the next hour, the same thing we looked for over there in German DAX. I want to see happen here. This is now creating that. See the SIBI here? Institutional order flow entry drill is what you're looking for here now. Right here. Next hour, come down, give this a little tag. 545. Let's go to our 5-minute chart. And where does 545 put us? 50% of this puts us 545, 460. That'll put us right on top of this order block and fill this in here. If the hourly comes to 50%, or sorry, 545 is 25%. So if we come back to here, tag that and go higher, 545 and 460 on a 5-minute chart. 545 is here. That'll put us in consequent encroachment of this mean threshold, or of this BISI, and 50 will give us a full fill. So you have to ask yourself, do you want to let it come down to here and your stop loss will sit here and look for that to go higher? That's the kind of wiggle room you can give it. You don't want to see it close below here. Because if it trades through this, takes this out, you got a first indication that wants to go lower. You've got a little fair value gap right here. We have not closed below it yet. So if we close below this and take this and comes back, find support, look for a deeper run in here. And then you're hoping and praying that it doesn't break through this BISI here. So ask yourself, how much of this range do you want to give up for profits? If you've 50 would put you at 355. So that's a question you want to ask yourself, and that's whatever trade model you prefer. My opinion means nothing there. That's entirely up to you. Is there anybody else want me to look at something else before I head out here? Oh, look at Dow Jones. Kids, man. Look at that, all the way back down. Perfect fill. And then we have a change in direction again. We trade above it. We come back inside it. It's consequent encroachment. And then, ba-boom, off to the races she goes. Wow. Mr. Jones, Mr. Jones. Wow, that was the only entry in this hourly range here. You got one entry here, and the next entry didn't occur until down here for a short, and you're already in a discount portion here, so you're aiming for this entry, this exit. And it literally hit the exit, gapped up, or opened up, and then proceeded to go down. So you'd have to look in here, which is 58 big figure, for an entry for a retap of this here. And that is right at this time of day. Right there. So we're looking for, there's the drop down. And then the retest here. Wow. Is there a 5-minute one? There. If continue without coming down, what can be expected if it doesn't go down? Look for 2.5 and 3, and then the 4 banger above you. Like, there's nothing stopping this right now. So if your 5-minute continues to hold price and this bull flag, retail looks at this as a bull flag. If that holds, we want to see these two equal highs get traded through with a nice fair value gap, come back, use it as another little measuring gap, and keep pushing higher. Or just another breakaway, whatever. I want to see a space in there. I want to see a BISI in there. And then just let it run and wait for it. You can use your take profit model 3 then on a 5-minute chart to manage your trade. If you're in this long and you've already scaled out a portion there and you want to leave some on for a continuation, use your take profit model 3. Where does it fail? If we close back below that level right there, On a close, come back, tag it, close out your trade. If it doesn't, it keeps going higher. Every one of these that doesn't get closed below, you just keep staying behind them because those are your turn points. It's also your reversal model. That's what's great about a take profit model 3 is the reversal model is the actual exit for a take profit model 3. I've designed it so that you can actually dovetail and overlap using these the models. One protects you if you're on the wrong side. It just simply does an internal range liquidity hunt, and it's a quick little money grab. And those of you who are new, this is 2 standard deviations, 2.5, 3, and 4 standard deviations from our pick this morning from this thing here. As soon as it trades above that, we're looking for that to continue for 2, 2.5, and 3. And it can just continue to rip through here if it wants. Anybody want me to look at anything specifically before I head out? Trades above that right there. Come back, validate it right there, tag it long. I didn't look, I was too busy yakking, so I missed it. But we've got ourselves some nice little trades today. Cam model 1, don't have to worry about a cam model 2. Cam model 1, pay yourself at the low. Change in direction, close off your cam model because now you're changing direction. Look at that. That's a long. Pay yourself at the high. Pay yourself at the premium box, and pay yourself at rejection block. We don't get a body trading above the high. We just get wicks up there. Change in direction, starts to march down. Wait for this sell side inside this range to get broken to the downside. It does. Come back in, look for a range extension and continuation model. Here's your range extension. We'll let you trade it into it. Trade down, that's range extension. Now you want to see a continuation model. Inside here, you want to see hold price or this mean threshold hold price for price to go to lower and extend the range. So that's range extension model. Extends it past here. Now we look for a reversal model. Shades above, there's your entry for a long. You're literally long from there to there. And as soon as you break that high on a close, we look for a retest of that right there for the next continuation. You have perfect entries, perfect exits. Wait for your confirmation that this isn't just a reversal to go back into this consolidation, that it's looking for a breakout. It does. We want to see an extension model. See how it froze right on it? Comes back, hits that level. Now I want to see expansion into here. Good. Now I want to see a fair value gap form above that. A little tiny fella right here. Institutional, or so that retest of this candle, the mean threshold is what we want to hold price at. Once we break above it, it comes back and just tags the high beautifully and continues going higher. So from here, you've had perfect exit points, re-entry points, exit points, re-entry points for these trades. And now you got the reversal going here. You get out of your trade there, you're done. This is coming back the other way now. So as soon as it comes back into this level right here, which hasn't been hit yet, that high, all the way into this candle's mean threshold. So there's the high right there. That's hitting it. If it runs back through here, get on top of this one and look for that to continue going higher. That just bounces off of here and takes this candle out. Look for the mean threshold and that BISI to get taken. And if that gets closed below, then we're coming back deeper into this range. So you're watching here and here. Gold will touch monthly high level soon. So Do you want me to analyze gold, or are you just telling me that? There, now we've traded above that. Now I'm looking for this to continue going higher. For gold, let's look at gold on a monthly chart. Talk about an A plus sleeve, hey? There's your, what we were talking about on a 1 minute chart. As soon as it breaks a high, I want to see a fair value gap form above it. And then I want to see this candle come back in, do it, your graded response. That's an A plus level leave right there for months. That's been like that since the beginning of the year. A plus level response, it leaves. And you're waiting for an A or a B or a C or a D. Nope, didn't give it to you, just decided to leave. So the next idea is we break this high right here. You trade back through it. Now we're looking for a retest on the high. Retest the high right there. There's your entry. That was back in February. Now you can catch your long. Stop loss will sit down here. And then now you're looking for your fair value gap to get broken to the downside. It doesn't. It doesn't. It doesn't. It doesn't. So far you're riding this all the way up. So each one of these you're behind protecting your gold run on a monthly chart. That's a mega run. So you've been in this since February of this year with a near perfect entry right here. That would have been a perfect entry right there at 2,806. And you look on your lower time frames right here for your entry. So when you see that one close last month or in January, you say, I'd love to see February open and come back and tag this old high. If it tags that high, I'm going long, or I'm looking for a long entry, because that's the first trigger, right? So then you go to your weekly, and I'm going to box this in so you get an idea of what it is. Why you don't just say, oh, well, it's easy to say that's where price was going. It's very easy to say that, but you don't know it's going to go there. No, I don't. So this is why we start to hunt for an opportunity right there for our reversal. So we're going to whittle this down so you can see where our entry would have finally been. And then I'll mark a line there, make it nice and big so you can see where you would have caught that. Because in February, you're hunting for your bullish long position. So let's go down to a weekly chart. So now we're starting to hunt for our entry. Christmas is over, January, the new year's begun. If you're on a weekly chart, you would have seen this run happening long before the new year, or right as the new year began, right? So here's our premium. We trade back through that premium box, right? I want to see a body trade through the premium box. This is what I teach you guys every day on a 1 minute chart. Now I'm showing it to you on an hour or a weekly chart. So there's our premium box. We trade through the premium box, and I say, I'm looking for a retest of this premium box from here to here. I'm looking for a retest of this premium box to go long. And I'm looking for a range extension model. So this is the weekly range extension and then continuation model. So the range extension model is, I want to see this range extend. So my target is right there. So I'm looking for 27.97. So as soon as that closes above, I'm hunting now for my entry inside this level. So you chop down here for your long. I was telling you the monthly is what we're looking for, so we'll stay focused on that. But I can chop this down even further depending on what chart you stay on. If you wait now and you say, this is my long, and I'm just going to wait for the month to close above that level because I'm looking for a retracement back into here, remember? I'm looking for a retest of this old high. If I can get this month to end on a high note above that high, I'm just targeting that high. And if I can hit it, close above it, great. If we can come back and re-hit it again, I'm going to target that for a long. So where's my weekly chart? We closed above it. We closed above it right here. Now if I can target that on the week, so the month ended up. Let me see where I'm gonna make sure I mark this so I'm not kind of misleading what you guys are thinking here. Here's the top of the of that month we wanted to see get broken. Okay. So we wanted to see that get broken. So the very next week it goes up and you go, sweet. Now if this comes back in next week, if we come back and tag this, I'm going long right there. So you get a perfect entry right there next week. So you're looking for Monday, Tuesday low of the week, and then a continuation, right? That's because I'm trying to trade on a monthly chart now. I'm not worried about this. Once I get my entry, I let her buck and just let her go because I'm trading on a monthly chart. I'm looking for my entry on a weekly or daily chart. So here's my weekly. Now I'm zooming in right here for the day I can find my entry. So I'm using this whole wick area right here, right? So that's the high I'm looking for. So right there, I'm looking for the day now. This opened on a Sunday or Monday and it started going down. So is this a Monday, Tuesday, Wednesday run? So let's go down into a daily chart now. And we're hunting for, forget this stuff, even though I can tell you we could have seen this run happening way back in here, but it doesn't matter. I'm not here to show you that right now. I just want to show you, and you can see where it's gone based on what I show you every morning on a 1 minute chart. If this was a 1 minute chart, you guys would be like, oh yeah, I made a couple of bucks here going on this little run. But this is a weekly chart. It's a killer. It's a smash hit. So what I'm teaching you on these lower time frames are just a bomber. So anyway, what is here on that we're looking for this to get broken to the upside. Look at this. It actually gaps down. So this is the day that it closed on the week. And this week opened up and went, I'm getting in here right there. So if you would, and what does it actually line up with? The midpoint of that candle. Coincidence? I think not. So anyway, it left and you go, damn, did I miss it? So you go, I'm okay now. So this is your Sunday. Well, this is January. This is a Thursday. Wait. No, we want to wait for this. So Thursday it went through. So that's Thursday and Friday. And you go, oh, look at that. It creates a nice fair value gap above our thing. Remember our graded response? Think about our graded response now, you guys. We're hunting on a 1 month chart for our entry on a daily chart. Okay. So this is how we're digging down. We pull our fib tool from here to here, our graded response. Sorry, Ali, I'm going through a whole bunch of I'm just pointing out how you'd find it on a 1 minute. So I'm kind of teaching you some, look at, this is how you're hunting your trade setups. So our graded response, we have a trade above, we have a fair value gap that we look for on a 1 minute chart. Here's the daily. Now I'm looking for this week to open up. It opens up here and then it starts to trade down on a Monday. The Monday starts to come down. You go, oh, sweet. Now I'm either going to go A level response. I'm going to enter in as an A plus up here. And as soon as it opens, I'm going in. I don't care. That's close enough for me. I'm going to go. Or you want to zero in and say, if it comes down into here, I'm looking for my entry. I'm going to take an entry right there. That's A level response to here. So B level is 50%. Right there on the money. And remember that little reverse engineering thing I did for you guys? Look where it lines up. This is gold on a 1 month chart. Look where it comes down to. That would be that reverse engineering I was trying to show you. Hits 50% and then goes higher. Okay. And now you're looking for your entry. So you're going here, here. You say, I'll take that. I'll take this. I'll take that. I'll take this. I'll take that. And I'll take the close. I'm all right with all of those. I'll take scale in my profits, and then I'll put my stop loss below this low here on the daily. And that's my monthly chart. I then did. So now you're going to say, let's zero in on this level on the hourly or a 4-hour chart. On a 4-hour chart, where's our look back there? It's probably too many months ago. This may be as far back as we can go. We might not have enough data to get all the way back to February. So there's that 50% perfect entry. So you say, all right, now as soon as I get here and I go, that's hit that level. Now, any type of response I get off of this, I'm looking for an entry. So 50% of the range. If I pull my fib tool on this whole range, from low to high, %, we're just below 62%, or just around 62% of the range that we've had as a retracement. So we know we're zeroing in on our monthly chart for any entry that supports us in here. So 4-hour, the only entry you have is right here, and it didn't give it to you. So you would have waited until it broke market structure and used this candle as support. It would have come back and took your stop loss there. You'd have to give this the wiggle room for that stop, that SIBI to get retested. Remember, if it takes out the mean threshold here, right there, if it takes it out on a close, then it's coming back into the SIBIs, this one or this one. So it comes back into it. Wait for structure again. If it breaks that, then you can get back in on this one here, or a retest of that old one right there. So let's look down even deeper into a 1-hour chart, see if we can find something there at February. I don't know if we'll have a data reach back that far, but it was February 1st, I think. So let's go to February 1st. February 1st. Let's go to, good. So we're zeroing in on the hourly. So we've got a monthly chart. We're moving into a 1-hour chart, which is like a 1-second chart for us, right? So I'm looking for any reversal opportunity on a 1-hour chart. So here's our reversal right here. And I say, if I can close above that right there, my entry's right there. I'm long, stop losses right here. Instead of where it was way down here, my monthly entry point is right here for my long. You go long and leave it alone. And as soon as you break that high, move your stop loss into break even plus the cost of the trade. And now your trade is on for the rest of the year. And every time that a new day comes and you have to pay a swap, move it up. Cover your swap, cover your swap, cover your swap. So by the time the end of the month comes in, which is like way over here, your swap, whatever it cost you to hold that, you're just moving it up. So you're always at a break even plus the cost of a little bit more of your trade. And then you're off to the races. If it comes back down to here, that's 284. I don't know, whatever the cost of your swap would be. I'm sure it wouldn't be anywhere near that. And then you're off and running to the races. We got in down here. So Michael uses his, was it 40 days? I think it's 40 days or 41 days. You want to trail your stop loss behind your price. And you have a target. So if you have a upside objective, you would, so like a terminus, which would be a 2 standard deviations or 3 standard deviations or whatever your terminus is, you want to trail it 41 days behind. And as you get closer to your terminus, you start to trail it 20 days or 21 days behind your terminus. And then I would just use my ranges, and I trail it on a daily chart behind the BISIs. The moment the BISI's broken, the closer I get to terminus, I start using a take profit model 3 on a daily chart to manage my terminus. If that makes any sense. Anyway, that's how you zero in on your monthly trade, if that helps you guys. And that's the same thing we're doing on a 1 hour chart when we're trying to zero in on a fair value gap down here and we want to aim for a higher objective. That's what we're doing. We're zeroing in all the way down to a 15-second chart if you want. And as soon as that hits that objective, you look on a 15-second chart or 1 minute chart for the reversal. And as soon as it clears the range, move your stop loss to break even and let that ride now. As soon as it clears the range, now move to your next highest range. And I'm giving you something. I just woke up in the middle of the night with this idea, and I'm sharing it with you guys right now. This is gold. Those who stuck around, all 13 of you, or if you're rewatching this video on the weekend, I'm giving you some gold here. If the lower time frame that you got in on gets broken to the upside, switch to the next highest time frame and manage it from there. As soon as that time frame is broken to the upside, move to the next highest time frame, and you can manage it like that each time frame as it continues to expand higher and higher. All the time it breaks that time frame. Otherwise, if it doesn't, you're working in that time frame until it's broken to the upside, and market structure is broken in a 5 minute. Move to a 15-minute time frame, and you'll see the next range that you're trading inside. And as soon as that range is broken to the upside, you're looking for the next time frame. Huh? Pretty good, hey? Pretty cool. Anyway, I hope you found that value. So anyway, back where we were talking, you were talking about like daily over here at December or something like that, right? I know I didn't answer your question, but I went off on my little ADHD brain, went off on a tangent. Well, your question, gold will touch monthly level soon. Could we expect a reversal? I don't see a reversal just yet. What the next sensitive level for reversal, Ali, is right here. Right where we're tagging right now. This mean threshold of this up close candle here. Right there. 43.14. If it hits 43.14 and rejects off of that, I gotta make sure that's exactly what I'm looking for. 43.14.2. As soon as it hits that, pay yourself, because if it hits that and rolls over and goes lower and does not take these equal highs, if it goes through that level, then I'm looking for rejection block at 372, whatever that candle's open is. Open is 371. So that's what I'd be looking for my next objective, and then the equal highs. That's for gold. Make sense? So I don't expect a reversal. Oh, sorry, that was the, yeah, that's the monthly as well, isn't it? Weekly, I don't have an upside objective. See, there's no upside order block, but the daily there is. Weekly, nothing. We just have wicks, right? So you're anticipating we're going to take that high. So if you take this wick, the last up close wick here, and split it into quarters, if you're on a weekly chart and you're using that, look where we're sitting, 25%. See how it hit it and reacted off of it? Right at 25%. And now if we run to 50%, that's 4333. Go down into our daily chart. 4333 is just above our mean threshold here. So if we end up seeing that run up and it runs into that 433 on wick and then closes on the mean threshold, I'd be looking for some sort of 4-hour, 1-hour reversal here. So all the time you're hitting these objectives, you're constantly looking for the potential for a reversal. If you don't see it, then just let it keep riding. Look for a rejection block next. And then if that starts taking that, look for the equal highs. Look for a reversal at each one of these data points. That's the data point I can see on the daily and weekly levels for you. Does that make sense, Ali? Does that make sense? I probably lost Ali already. Okay. Yeah, definitely made sense. Okay, good. What was price on the 4 level? Are you talking about silver? There's 2.5. Oh, there's 2. 2.5, 3. Holy smokes, look at this thing go, hey? Vitali, this is in Ecuador, you're going to have yourself a mansion. This is some serious moolah you're making today. Good for you. I'm happy for you. It's 64,915. So all the time that's supporting price. We did not trade below there. See that? You're still good. Cleared above here. What do we get? We have a fair value gap forming above an old high. Graded response, A+ level leave. That's an A+. It takes the high. That's a pay yourself A+ level. You hit level 3. That's 3 standard deviations for today. Vitali, you are killing it, man. Good for you. How many other people want to jump in on silver now? Hey, Vitali's like, I'm collecting all the silver doubloons. I'm in collecting doubloons like a good old pirate. He doesn't care about the gold. Just give me the silver. I'll be the guy that scoops up the silver. And a nice scooping opportunity you have. Look at that little change in direction right here with a nice, beautiful entry at 62.98. And you're already up 2-3% since 9 o'clock this morning or 10 o'clock this morning. You're up 2% just on that account, just on that trade. 2%. Crazy. Tell you, this stuff works. This stuff works every day, every way. It keeps paying, just keeps on paying. It never stops. Like Michael says, once you see it, my friends, you cannot unsee it. You cannot unsee it. It's there staring you in the face every freaking day. That's why we're here studying the chart, staying in price action. That's exactly where you entered. And a man, that's my boy, Vitali. Good man. Vodka shots are on you, my friends. Good for you. This is a great video today. It's a good one. It's chock full of lots of learnings today. Really good video. Go back over this video, you guys, because it's 3 hours, but it's got lots of information. I've given you tons of stuff. I've even given you advanced concepts that Oh, how's our dude here doing? Still waffling there. See how it's starting to pull down? So now you take this and pull it a little lower and then see where we sit. See how now the 50% sitting right on the candle's body, not this high anymore. It's on this candle. 50% is right there. So let's see if we get a graded response into these levels. It's kind of interesting. When we were looking at that, we're doing a graded response, and we were saying we had it sitting up here somewhere. We said, if it comes back to that being the edge, well, if you would have traded that back to the edge of that, even if you reverse engineered it and said, I'm going to go short there because I'm expecting it to hit here, and I want to see it come back in for my entry here, so the next 4 hours I can catch a nice little run. That's that retracement back into the top, and trying to predict the top of the BISI based on this level here. So we'll see if that holds. Anyway, I think that's going to be it for me. That was fun, you guys. I enjoyed that. Vitaly, congratulations again, man. Good for you. Glad it's working out for you. I'm glad you're finding your entries. You're paying yourself along the way. That's what I like to hear. And if you're new to our channel, subscribe. Hit the thumbs up if you like what we're doing. I do appreciate all your thumbs up, all your thing. If you've got Facebook or anything else, kind of get the word out there. Let's help some other people out. Let's not just hold this. It's not about us. It's about helping people out like yourselves. You all have to kind of get to a point where you're going to get profitable as well. So I kind of hope you share this with your friends and get the word out there. Let's help some people out, because it won't matter how many people we help. It's not going to affect your making money. I'm giving this away for free. It does not affect my ability to make money. It just helps you guys get to where you need to go. So if you can do the same thing, I'd appreciate it. We can get the word out there and help people out. And we're just developing a community of people that want to help people succeed and get out there and improve the quality of life for themselves, their family, and their future. So with that, thank you so much for everything, you guys, and get the word out there. I'll see you guys tomorrow. Take care. Have a great day.